Good day. This is the Eye of the Storm podcast, the big picture technical outlook for the NASDAQ 100 and the S&P 500 for Saturday, July 29th, 2023. As we move through this long-term process, I just want to touch on Thursday, and Friday's trading. It was extremely interesting, number one. It was driven by two totally different factors. Number two, Friday saw what I thought could have been a lot of fear of missing out, but it was more related to Friday's expiration than anything else. And that expiration was basically getting preset Monday, Tuesday, Wednesday, Thursday morning for sure, but then afternoon came and they clicked a button and it got sold hard. And I mean, many assets got sold hard, not just equities, but the bonds went down, gold went down. So a lot of things just turned and headed south. And so that turned a lot of adjustment because of the expiration that was going to occur on Friday. And then to come back in on Friday and have the reverse take place and for it to just go up above basically where it started to go down. Just, it's like tossing your cookies. Seriously. It's like suddenly all you can do is just regurgitate and it doesn't stop. But this time it was, you were running up the hill and regurgitating. So what does all of this mean? How does this fit in? So I want to take one quick step back and start here on the 4-hour chart, but I want to go back even further because the discussion really kind of rolls around as to what's honestly happening. How does it fit into the Elliott picture that I have been presenting and working on since at least October, but in essence, this whole move started in January of 2022. So we're not even halfway through. We're not, I don't think that we're basically even moving to be a quarter of the way through, a third possibly coming up once we were to complete a primary C wave down. Then on a much larger level, we've completed the first of 3 cycle degree moves, and that would be cycle wave A, leaving us to come up next with a cycle B wave. Now, again, I'm going to run it out to my maximum monthly. This becomes the noise behind the curtain because I've got all my fibs up, which I'm going to leave up. But just this large picture, we completed at least up to a cycle degree wave 5, because don't forget the NASDAQ does not have as much history as the S&P 500, as the Dow Jones. It's a much newer index, but still I stuck a super cycle wave 3 above that. But in all honesty, I'm truly counting on a cycle degree. I'll go the cycle degree even up to a corrective phase, but basically I'm taking the degree accordingly as we move forward. That doesn't mean that the NASDAQ is not going to rally or correct, because undoubtedly it is. Now, here is the cycle degree wave 4. This was the dot-com bust back in the year 2000 out to 2002, 2003. Actually, it started to kick back higher in October of 2002. So leading us right in. And then this is 2008, 2009, the great economic collapse. The dot-com bust hit the NASDAQ much harder than the free fall collapse that we saw in the economy, on an economic basis, the markets. So those two now on a cycle degree, we're going to correct. We're going to correct down, and we're going to be correcting all of this. And in essence, and I can't go back because this is all the data that I have, I go back to where I could probably pull it up on the NDX. Let me just take a quick look there. NDX. Yes. So in the NDX, I can go back to 1985, and that's perfect because I can show you the entire move, the cycle degree move. So when we look at this, the first thing that we got to realize is that on a corrective basis of correcting a 5-wave of cycle degree move, I'm looking for a cycle degree ABC down to fit this in and begin, if anything, the next cycle degree move. So because even if I'm only labeling this, as you can see, because that's all the data that I have, that it is cycle or super cycle wave 1. So because don't forget that this is all based on technology, and technology continues to explode in our face. And we're seeing it now, the fact that the markets are rallying based on artificial intelligence, which actually will be that it'll take over many different things and quote unquote improve our lives. Whatever it's going to do, it becomes where people want to place their money. In any case, but before that, we've got to finish a super cycle degree wave 2. So what's going to be inside of that? It's going to be a cycle degree ABC. So if that's what I'm looking for in here, just a super cycle wave 2, so a cycle degree ABC down, it's going to finish itself within the 4th wave of 1 lesser degree. Well, that's right there. That's the pandemic. So again, I'm drawn down to the pandemic, to those lows. It's right in there. And again, it was a time when, boy, the NASDAQ got smacked. We went from, at that time, we went from 9,097.35, let's say, yeah, down to 67.72. I was like, bam. But now I'm going to start a correction that should be steep and nasty from a much higher level. I'm starting it from 16,000. So, and if I'm thinking that it's going to come down in a cycle wave ABC and end up here, and what we're now sitting in, again, is we're still running up to finish primary wave B of cycle wave A. So we still have a primary wave C to put in cycle wave A. Now, I want to draw our attention to what could happen here in this primary B wave that would keep alive a picture that would include new all-time highs. Again, first, before I do all of that, well, let me go through that whole process with you. It's not difficult. It's just running Fibonacci retracements. And right now, the retracement that I'm looking for is this B wave. Well, there's the all-time high, 16,764. That's on the NDX. So what, I could actually do this. Let's go over and do it in the NASDAQ and the NQ, because that's what we trade. So same deal. I go from here, and those numbers are in. Okay, so that's this. And they're just the retracements for a B wave. So normally we're looking at, which I've already taken them off, it was 0.618 and then equal. So because there's several coming in, but we've already gone through 0.618, and 100%, which is next up, is 16,767.50. That's the all-time high as it stands now. We have been as high as 16,063. So we're within a stretch because the NASDAQ was up 275 on Friday. So when we get up towards that 16,000 number, and we're now pushing above, this index will move in like fashion. It will be a mad stampede because everybody's like, okay, we're breaking out. We need to get into even more. They're going to put even more money into it. This entire process turns into, oh my God, see, it has been a bull market. I'm late. There are enough people sitting out there. They're waiting for the decline because they want to buy, and they want to buy at the bottom. If they feel like they're missing it, they'll jump in at the top, and they might make some initially, But God bless you, because if you don't remember to get out, if you're not a trader that is just in it to make a goal and then you're out, you could be jumping in and get slaughtered, because many people will. So my point in all of this is that even if we go to new all-time highs, it does not change what's coming. And I'm only talking technically on what this Elliott wave pattern is telling me. And now I'm looking at my weekly pattern, but I was out on my monthly pattern. So if we should go here, it still can, but it's going to be in a last-ditch effort to get to new highs. And before I go there, I want to bring up the last time we had markets that decided one or all decided that they were going to go and just make new all-time highs. Now here, the Dow Jones, this goes back to 1902. So I have 120 some odd years of data sitting right here. Thank you, Thinkorswim. Now, this is Elliott, Grand Supercycle 1, Grand Supercycle 2. So we're not even up to Grand Supercycle Wave 3 yet. We're still in this supercycle. So that Grand Supercycle was the crash, 1929 to 1932. And then it started to rally. So within this Grand Supercycle Wave 3 thus far, we've had a depression, we've had a world war, we've had the Korean War, we've had a long period of basically just, recession, just nothing, things were not nice, they weren't good, and we went through this period of time here. Then this is the 1987 crash. So again, we had the Vietnam War, we had Watergate, we had a lot of stuff come bubbling up, and the market didn't really do much. And then we entered into the next period. We had a very strong period of inflation, and then we came out of that. We roared higher. It was again an interest rate deal that dropped the market that particular day, but then we built again, still as a part of a cycle third wave. So all of this was within this longer term bull market. Even if we take it from here, where this supercycle wave 3 began in the S&P in 1942, we're in the war, and basically we're the only country that there's no war on, so we could produce everything, and it got sold. So war was money, and money for the United States, blah, blah, blah. And so here we go. Now, this is the part that I want to take a look at. This was in the year 2000. So in the year 2000, this is the dot-com bust. It devastated the NASDAQ, did its damage to the Dow 30, because that dump took all of the indexes down. S&P had NASDAQ stocks in it. The Russell had NASDAQ stocks in it. I believe the Dow probably did at that time as well. And it may have been Microsoft or something. In any case, the market dove down, and then it recovered, and it was the Dow. It was the Dow all on its own, went up to new all-time highs in October of 2007, just before the mortgage collapsed, or the mortgages collapsed, where it's, at least here in the state of California, a lot of people were being given mortgages that should not have been getting the size of the mortgage that they were getting, because A, they were overpaying for the house, and B, they couldn't really afford to pay for the loan if anything were to happen. And at that time, houses, the price of the house went under what they call it, went underwater, right? So the house was worth less than what they had borrowed. So they walked away, and a lot of things happened. And anyway, we had an economic collapse. Dow goes to a new all-time high just before. And the happy days are here again. Everything was fine. People were getting houses. They were selling houses left and right. What's to give? What's to break? And then boom, it happened. So here we are. The correction in play now, a super cycle wave for correction. Elliott tells us that and this is in the Dow, that we go back and we take a look to the previous fourth wave of one lesser degree. That's the cycle degree. So where can the Dow end up again? Somewhere down in here, before we go into the next economic expansion. So the thing that people think is that, oh, it's the end of the world. No, not really. I think it's going to be a lot different, but there will be stability. There will be points where it's like, okay, we're okay, and everybody's, we're getting money shifted around and things are happening. It's not going to be fun going down because a lot of the assets that have been pumped into the market in the last 20 years, or last 3 or 4 years, but the last 20 for sure, are going to begin to unravel. And not 20, I really meant from 2008, 2009. From that low, the amount of money that's been pumped into our system since 2009. So what we're looking at is 13, 14 years. Excuse me for my exaggeration. That all needs to be resettled. That all needs to be taken out of the market. That there's too much in, and it's going to go. And that's what I'm talking about. The correction is just in this. And it's reevaluating. This is a lot of overvaluation. Now that's the down. Let me go back to the NASDAQ because that's where I was. So no matter what happens, I am not fighting. I am not saying the market can't go and make a new all-time high. I am including it right now, but I am not considering it a new bull market. I'm not considering it we're in this great economic expansion. I'm not considering that tech somehow is going to overcome every other ailment that sits in the world. If it is, then it's artificial. And guess what? That's what we're buying, artificial intelligence. So I don't know. Is it going too fast, too soon, too much, whatever we want to consider it? The market is setting itself up to correct again because the longer-term pattern remains intact. The declaration of the bull market came against all odds. It's like, how could you come up with that? What was that 20% number? Oh, the S&P went up 20% over the decline? What? Or from the decline? And that declares a new bull market? Okay. But other markets now are greater or less than? Okay. The NASDAQ, for one, right? NASDAQ's up more than 20% from that low. But guess what? It can go 100% to the high. What then? Is it definitely then a new bull market? Or is it just, what's changed? Well, we keep spending money. We keep giving Apple our money. Well, guess what? If they're going to have to charge more. So we're going to have to give them more. So what happens when that changes? What happens when dollars become harder to come by? So what happens? And so to put your finger on exactly what it's going to be, who knows? Who knows? What I can say is that, yes, I do believe we're going to have a correction. I don't want to consider economic troubles or all that other crap that other people want to talk negative, because I want to tell you here and now that period of time when the market is going down, the more opportunities that'll be given will blow your mind for you to make money every single day the market trades. So, and it has nothing to do with, well, I'm going to buy a stock and keep it. I'm going to ride out all this because they're just going to keep making money. Well, why would you need to ride out a long period of a correction and give back 75 to 95 to 100% of your money? That just does not make sense to me. But you can trade, and you can trade every single day. And that, yeah. Well, I have a career. Well, then you kind of need to set yourself up to not be sitting long stocks. So, but people are. In any case, back to the Elliott wave, let's go take a look at the technical picture. If we still absolutely have the potential for this market, the NASDAQ, to go to new all-time highs. And there they sit, 16,767.5. We've been as high, again, let me review, we've been as high as 16,062, basis the futures market. So if, as last Thursday, I had put out, okay, let me go to the 4-hour chart, sorry, that what we had completed was, and I took it off. I put the 5, so this shifted. I put the 5, the minute 5, the minor 5, the intermediate C, and the primary B. Stacked it, called it over, and that was wave 1, and we were looking for a 2. Now, I come down to the hourly chart, and I get the 1, and I get the 2, and we nosedive, done, put the 4 or 5, we're all done. And then Friday rolls along, and I'm like, what are you doing? What are they doing? That high on Friday, 15,895. This high from Thursday or Wednesday, no, Thursday, was 15,904. So, okay, you came within $10. But realistically, if we just go on a close basis, a line chart, I made a new high on Friday after nosediving. Now, granted, I told you that was 3, and we're looking for 4, come down, put in my 5. I had felt basis candlesticks, I could do that. Closing, you could not. And that was the difference, I have to tell you. And now we've gone up. So what does it do? It throws us here, A, B, C, small failure. She did not take out the low of A, but still the 4 gets moved over. 1, 2, 3, 4. Come on, 5. Maybe. And again, I'm going to go to that line chart. It's kind of was like, grab it while you can, because the earth is coming to an end. Whatever. It's a bull market. You got to be in, et cetera, et cetera. So that still has to be allowed. Now, whether it's going to be 16,058, whether it's going to be 16,396 to 16,400, or, excuse me, does it shoot for the moon and end up at 16,988 to 17,350? Both are possible, folks. That's the technical picture. Still would be the same thing. Now, one other thing I want to add, and I talked about this on Thursday, and I talked about the Minsky effect. I just want to bring this in real quickly. So, according to this hypothesis that was, Hyman Minsky, that it was a sudden major collapse of asset values, which marks the end of the growth phase of a cycle in the credit markets or in business activity. Key, underline credit markets. Key, what sits atop of my pecking order? Interest rates. The equity markets, folks, are basically ignoring that interest rates are going up. Why? Because we have a chairman who basically is like, I don't want to upset the world and start a mass panic on pulling money from everything. But that's the degree that it's gone to. So whatever people are doing, they're just putting more in. It's really kind of bizarre, but that's what's happening. So, but according to the hypothesis, the rapid instability occurs because long periods, and this is according to Wikipedia, long periods of steady prosperity and investment gains encourage a diminished perception of overall market risk. AKA, let's take a look at the VIX. The VIX is low. It is telling us, quote unquote, complacency in the market. They don't think it can go down. It can only go up. The risk is to the upside. So what do we see? What trade does perpetuate that? The dispersion trade, where they're selling volatility premium, and buying underlying volatility premium. So, and then that just forces asset prices, right? They forces the equity prices to go up, to rise when that trade is going on. It's a trade. It's a numbers game. But that's what's happening. So when it turns the trade will also reverse. And then what that dispersion trade is going to be is buying buying index volatility and selling the underlying volatility, the underlying premium. And when that starts, it's all going to drop and it'll go quick. But we now need to leave open. Right now, I have 16,396 to 16,420. That would be a zone where I thought, okay, this fifth wave could get to it, could finish it. It may only get to 16,058, right where the old high was. And that's it. Doesn't go any further. And that's a 5. And we just get leg number 2 of what we had on Thursday. But this time, it really doesn't stop. This time, we really do move into, oh my God, interest rates are going up. And we do have a little bit of a problem, whatever the situation is. So when it does turn, it's going to be nice. And there's going to be more opportunity to trade and make a ton of money. Trading the futures, trading individual stocks, a lot of trades, trading options. I don't care what you pick them. There's going to be enough to do and everybody gets to participate. Now, over in the S&P, it's really the same story. And I know I've gone a long time, so I don't need to go into the background of all of this stuff. Let's just talk S&P. So same deal. Goes up, puts it in that beautiful high, hits it on the nose, into that resistance zone. The turnaround was dramatic. It truly was. It was the rejection that I want to see. So many things, and then we rally. Now, here in the S&P, different. Once again, we got a little bit of a difference between the tech and the more broader based index, and that's the S&P 500. We have not exceeded that high. So I put it out like this, but basically what I had presented on Thursday remains valid until the market were to break above 46.34. Because in actuality, it can actually still leave the 4 there, the 5 here, the minor 5, the intermediate wave C, the primary wave B can all remain here. This remains 1, and this remains 2. And 2 can go up even further and still be time to turn and drop. So this still can be the 5 and the primary B, and this is wave 1 of a new 5-wave sequence down, wave 1. Maybe minute wave 1, maybe only minuet wave 1 of minute wave 1. But it's the first, this is the second, and we tip and we go. In the NASDAQ, it truly can be the same deal. Could be a failure. You didn't go take out that high, fine. But we saw on the closing basis that within this under 16,000, it did. And we still got Apple and Amazon next week. All right, so here, I've left it here so that they're running incongruent. They're being congruent with one another, but there could be a little bit of a difference. We could get that quick rise. They just get up above 16,062, and that completes the whole deal, and boom, kabang. And this, okay, what does it have? If 4 is going to be there, it has potential to get to 466.66 or 47.35. The all-time high sits up here at 48. I believe it's 48.08, excuse me. Right there-ish. So we can get close. It can get close. And maybe it's only the NASDAQ that'll go up. And maybe even get up there into the promised land, so to speak. But this can too. If this is the 4, and then we're doing a 1, 2, 3, 4, 5, then yeah, it truly is alive. And let me go back and fill that in because I took those off too. So what we're going to put back up there is, oh, JR, excuse me, I didn't want that one. Yeah, I don't want to close it. And I just want to go here, and that's going to be correct. I'm just doing retracements. And you can see that the market can get up to, the first one is 51.16. Once it breaks 48.08, we do have additional resistance at 48.48, but then we have 51.16, 53.07. Those would be the areas where a irregular B wave could reach. Now, in the meantime, we got a lot of stuff going on. We got stuff that they started to, what happened on Thursday, I don't think we can just go sudden selling. Who cares? Nobody cares. They bought it back up. I don't know. I think there was more behind it than we wanted to see. In any case, I think that no matter what takes place, the S&P along with the NASDAQ still has upside potential, but I think the longer term play is going to be to the downside. So, and then depending on how long-term you are, depending on what you think you're going to buy, depending on what you're going to do, you're always going to have to factor in, there is a possibility that the S&P could tack on another 500 points, 500 to 700 points. And that would be a blow off top. That would be like, oh my God, the world's coming apart and we better get in type of a rally. So again, you're going to have to go pinpoints. Like everybody on television is going to be screaming, it's a bull market. It's a bull market. You got to be in. And that's what people are going to do. But they're going to fail, I think, to really produce any solid evidence that all this stuff is turned around. So it'll be a lot of conjecture, it'll be a lot of regurgitating and twisting what Powell and others may say. So that's the story in the S&P and the NASDAQ. Thank you for listening, because I certainly did get up there and talk today about the different factors and what I feel, really is still to come and what it could look like. I will produce an Elliott Wave update tomorrow if there's something bizarre with the opening. Otherwise, the next Elliott Wave update will be on Monday.